G'day folks, it's Jim here from Forex. It's Saturday the 16th of October and the markets have just finished the week on a pretty positive note following some decent retail sales figures coming out of the States. They surprised markets entirely by coming out plus 0.7% on the month as opposed to an expected fall of minus 0.2. Also helping things along, Goldman Sachs reported their quarterly results on Friday. They blew away expectations, and so that's all helped the stock markets out, and the major indices closed about 1% higher. In terms of the foreign exchange markets, that was a pretty choppy affair, really, rather directionless. The yen remains under heavy pressures. We'll go and have a look at in a minute. The euro really did nothing. The commodity currencies, though, are all thriving as we go through this period of positive risk sentiment. And that looks as though it could be set to continue in the days and weeks ahead. Elsewhere in the commodities market, oil was up, gold and silver were a bit lower. The base metals are all higher really on Friday, and really things look quite constructive. And I think heading into Q4, we're going to probably see quite a decent run into Christmas, but that remains to be seen. As far as the calendar goes, it's pretty empty this week, but we'll go and have a look at that in a minute. And in the meantime, we'll go and have a look at the charts.
Okay, folks, so starting with the daily dollar index chart, and as you can see, the dollar is pretty much chopping around, not doing an awful lot. It's confined within this range below sort of 94.60 and sitting around the 94 level on the base. It looks to me, I think that could well continue. The euro is not doing an awful lot at the moment, and the charts don't suggest that that's likely to change a great deal. And with the major weighting of the euro in the dollar index, I suspect we're probably in for some more choppy trade. The daily momentum indicators do look a little bit heavy, maybe pointing a little bit lower, while the weeklies, as you can see, they retain a constructive bias. So I think if we do come back down to sort of this 93.5 level, that's probably fairly basish for the time being. But I think overall we probably stay in the range between 93.5 and the 200 week moving average, which is up here about, what's that, 94 3/4 or so. So I would be trading that range. If we go even further out, as you can see here on the monthly charts, the momentum indicators have become quite oversold and have turned high, and they also retain a positive bias. So I suspect the downside for the dollar is reasonably limited for now, and I'd prefer to buy dips in the dollar. But I don't think, as far as the euro is concerned, I don't think we're going to go all that far. The real action is going to be elsewhere, and I actually kind of like some of the crosses. And in particular, I like Aussie yen. And while we're here, I'm just going to show a couple of charts. Now, this is a monthly chart of the differential between the Aussie 10-year rate and the Japanese 10-year rate. And we're currently out at 1.61%. Having based out previously, we were down here at this sort of 0.65%, and we actually did get up to 1.8% being the differential. That came back down February, March, April, May, right down to through August, and since then we've had a bounce. And the monthly indicators do look positive to me. So I think if the differential between Aussie rates and yen rates does continue to move higher, then that's going to remain supportive of the Aussie. And the commodity currencies in general keep the yen under pressure. And I suspect that over time we're going to see the Aussie crosses, Kiwi crosses, Canada crosses all move higher. Anyway, that's beside the point. We'll go and have a look at, start off with the euro. Okay, so here we have a daily chart of the euro, and as you can see, it's been pretty choppy for the last couple of weeks, really confined to a 100-point range below 116.40 and above to 115.20. I'm not really sure that's going to change an awful lot at the start of the week. There's not an awful lot out on the calendar this week. The daily charts look mildly positive without doing anything very flash. The weeklies, though, they're pointing lower, and we're still sitting on this 200-week moving average, capped by the 100-week moving average, which is the blue line, the pink line being the 200. So I wouldn't be surprised if we see further choppy trade around here, but ultimately I think the weeklies are probably telling us that the euro is heading lower, albeit slowly. If we get back down below 15.20, then I guess we can move into these sort of levels here where these highs come here, so 114.20. But I don't really see us going there anytime soon. If we go back and look at the 4-hour charts, as you can see, we're just chopping around here. I think this will be resistance. This is 116.40 again. If we do go above here, then we can possibly head back to sort of 116 and 3/4, and possibly even to sort of 117. Don't really see that, but and I also see plenty of support as we approach the base of this trading range here, down around this 115.20. So for the time being, I would use that as a guide and trade accordingly. Now, more interestingly, we've got dollar yen, and here we have a weekly chart. And as you can see, we're trading now at levels last seen way back in sort of 2017, and again in September 2018. We haven't been here for a long while. While yen rates remain so low, while risk sentiment remains positive, I think the yen will remain under pressure. And if we can take out this 76.4% level, which was a kind of target we mentioned last week, there's not an awful lot above here, apart from this March 2017 high. That's at 115.5, and then beyond there we really don't run into anything until this trend line up here, so 117.25. So we could see some quite fierce moves, I think, in dollar yen, and the crosses that go along with it. And as I just mentioned, Aussie yen I particularly like. We'll go and have a look at that in a minute. Coming back to nearer home on Monday and Tuesday, we have got some bearish divergence setting in here, so it wouldn't surprise me to see a little bit of a correction. And if we add in the FIBO levels, we've got these highs here, 113.75, 113.80 on Monday. That's probably going to be a buy level if we sit down there. But beyond that, below 113, so 113.20, I would certainly look to be a buyer down there, because I think eventually we are going to break to the top side. As I say, the 4 hours are showing a bit of divergence, so the dailies also are becoming overbought. So for the time being, look to buy that near-term dip. In the longer term, this is a 113 level, bit of consolidation there, but the next FIBO level doesn't come along till 111.75. But I don't think we're going there anytime soon at all, unless we see some kind of black swan event, which will allow a major move back into the yen. But for the time being, it looks the other way to me. And I prefer to be short the yen and long against almost everything else, dollar, Aussie, Canada, Kiwi, whatever. Sterling. So here we have a 4-hour chart of sterling, and that's performing remarkably well, really, given what's going on in the UK at the moment. All sorts of negative headlines, but 137.5, and the trend looks to be higher. The 4-hour charts are moving higher. The dailies equally showing some mild positive sentiment. If we blow this up, we are going to come into resistance here. We've got the 100, the blue line, the 200 is the pink line, and this pivot that goes a long way back here. They're all going to add a bit of a cap, and that's around 138.40 or so. If we go further out to the weeklies, you can see what I mean by that pivot, and it goes back a long way. So I think that's going to be resistance if we get there. The weeklies are not really showing us an awful lot. So given that I don't think the euro is going to move too far, sterling probably just chops around here, and I would say on the top side to 138.5, on the downside to 136.5 at least for the first part of the week. I think that would probably cover it. There are better things to trade, I think, than sterling. We'll have a look at the Aussie. I'll give Dollar Swiss a minute, but we'll have a look at the Aussie. And here we have a daily chart. We've closed, last week the target was the 100-day moving average. We were down at 73.73 last week. We come up here with 74.25 or 74.20 at the moment, but the dailies are still point higher, and I think we're going to push on. And if we can break above the current range, we could see a move back to 75 figure 10 or so. This high here going back here, that's at 74.75. That might be tough to break, but I do think this is the direction of it. The dailies do point higher. The weeklies may also be turning slightly higher, so I wouldn't get too excited about the top side, but I think that's well, with the stock market having closed on a strong note on Friday, that should underpin the Aussie early in the week. We've got the RBA minutes, I think, coming out on Tuesday, so that'll be the first point of call to watch in the calendar. If we come back to the 4-hour charts, they might be looking a little bit toppish early on Monday, but if we did see a drift back below 74 cents, I think I'd be looking to buy a dip there, and then looking for a move back above this high, and probably on back towards this level here. That's that 74.75 level that I just mentioned then. So that's about that. So the Kiwi, fairly similar outlook really. And here we have a daily chart of the Kiwi. Now it broke above the 100-day moving average, and it's going to come into some decent resistance here at around 71 cents, as and when we see it, the 200-day moving average and this descending trend resistance. But if we can get above there, then I think possibly these highs here, 71.75, 71.70, they're going to come into play. On the downside, back to the hourly charts, if we do see a bit of a dip on Monday, and we have got some bearish divergence here, the first FIBO port of call is down at sort of 70.25. Now I don't think we're going anywhere down there really, but I would be looking to buy it if we saw it around 70.40, because I think eventually we are going to take this out and test this trend line here at sort of 71 cents eventually. So if you don't want to play against the US dollar, Kiwi yen, as with Aussie yen, I'd look to be buying dips, looking for high levels further down the track. Okay, so that's about it for the currencies. Oh, actually, Aussie yen. So here we go. Now, we liked Aussie yen last week. I didn't really think it was going to move this fast though, but it's coming up towards this particular high here, which is sort of 85.80, and I think that's going to be the direction of it. The daily indicators are pretty positive. The weeklies are not showing us an awful lot, but I like the fact that the dailies still look as though they're heading higher. So if we really need to take out this 85.20 level first, and that's 50 points away. But if we do that, then I do think we can possibly head higher. And as you can see on the hourlies, we've come more or less an awful long way really, without any kind of real correction at all. So given that we've got a bit of bearish divergence here, I wouldn't be buying it here, but the 100-hour moving average sits at 83.85, and I'd certainly be looking at that as a potential buy level. And below there, 83.50. If we ever go back below the 200-hour moving average, which is a long way off now, but it is going to move higher, I'd probably look to stop myself out, but I don't think that's going to be happening early in the week. Okay, so for the stock markets, and here we have a daily chart of the S&P, and things look pretty positive. As I say, we had a decent retail sales number on Friday. The banks all reported pretty substantial profit increases above expectations, and the daily indicators look positive to me. So I think we can now, we've now at 44.75 in the S&P. I think a test of 4,500 and possibly the all-time high back here at sort of 45.50 could well be on the cards. On the downside, we've got the 100-day moving average, which acted as a pivot for a while. That's at 43.60, and below there the lows recently were sort of down around that 42.70 mark. I don't think we're really going to go back down there, and any dips towards the 100-day moving average do look to be buy opportunities for me now. As I said earlier, the Dow and the Nasdaq are both high as well, with the Dow being back above 35,000. And here we have a daily chart of the Dow. As you can see, it hasn't been back above 35,000 since, when was this, early September. So I think it's probably a fairly positive close to the week. The all-time high here, 35,600 or so. It wouldn't surprise me to try and see a test of this sometime during the week. And the daily indicators do point higher. The Nasdaq likewise, that's above 15,000 again for the first time in a while, having seen the all-time high back here at sort of 15,700. And once again, it wouldn't surprise me to see a test of those highs. We've got all the big FANG companies yet to report their profit numbers this week or next week. I can't remember when the actual dates are for the big tech guys. But certainly the indicators look positive for the time being, so I prefer to be long than short. While I'm here, I'll just have a look at the ASX, and here we have the daily chart of the ASX, pretty similar to the US indices. The daily momentum indicators point higher, and we've broken and closed the week above the 100-day moving average, which I kind of think might be a fairly positive start to the week. 7,400 obviously is the next test, and then so we've got these highs here around sort of 74 figure 10, 74.80. So that's kind of my target. I'm really looking to buy dips now down towards sort of 73, 30, 40 somewhere down around there early in the week, but looking for a move higher. If we just have a quick look at the 4-hour charts, they're not telling us an awful lot, but as you can see, we have broken above and close above this descending trend resistance, only just, but the 4-hour charts also point higher, so I'm looking for a positive day on Monday. The 61.8% FIBO level is at 74.30, so I would imagine that might be a reasonable target for Monday. I wouldn't think we're probably going too much higher than that, but eventually if we do, then there's not much until this peak here, so 74.85. Okay, so that's about it for the stocks. Quickly on the commodities, where the real interest is in oil. Gold and silver are pretty choppy, I won't spend too long there, but oil looks to me as it's going to head towards our longer term target, 83, 65, 70, something around there, being the 76.4%. And eventually I think we're going to break above it, and I think $100 towards the end of the year is not beyond the realms of possibility. Weekly indicators point higher, and I think that's the way of it. The hourlies look fairly flat. In fact, I've just noticed it looks to me like there's a rogue number in there in the close. I think it's showing 81.96. I think the close actually is around 82.5, pretty much on its highs, and I wouldn't take too much notice of this early on Monday. But anyway, it doesn't really matter. But I think we're 82.5, and I think 83.60, 70 is not going to be too far away, although I probably would leave it to see if we might get a dip down to sort of 81, the figure on Monday. I'm probably not much below 81.60, I wouldn't think, but look to buy any dips. As I say, the long term I'm really quite bullish on oil, and I think we're going to continue higher into the end of the year. Okay, so that's about that. Gold and silver. Here we have a 4-hour chart of gold. That took a bit of a hit on Friday, back down to this 1765.70 level. It was unable to overcome the 100 and 200 day resistances, which we're going to have a look in a second. And the indicators for the 4-hour charts, they do point a bit lower. So the market might stay a little bit heavy, but I'm still looking to buy dips. If we go out to the dailies, and I'll blow that up a bit, you can see we really were unable to take out this resistance, heavy resistance here in the 1800 level. They've got the 200-day moving average, the 100-day moving average, and that descending trend line. Once we do take that out, I think we're going to eventually, I think we're back here at sort of 1835, which is basically where this trend line comes in. And at any time when we break through there, I think we're heading on to 1860, 70. But the daily charts are not really showing us anything at the moment. Silver, I'm really not really watching that at all, except for the fact that silver had a tough day on Friday. It was down about 1%, I think it was. But I'm wondering if this might be a bit of a bottom here, with just a neckline just going through here. So if anything, I prefer to be long rather than short silver. Probably buy it down around 23. If we break above this level here, then I think we can possibly go on to sort of 24.5, 25 quite quickly. The daily indicators, though, are not really showing us a great deal of momentum. The 4-hourly charts, likewise, they're a little bit heavy to start the week perhaps, so we might see that drift down towards 23, which is where I'll be looking to buy. Okay, so that's about it for the various products. I'll just have a quick look at the calendar. Okay, so kicking off the week, we've got the New Zealand third quarter CPI. Then following that, the main event of Monday, that's going to be the Chinese data, headed by the third quarter GDP, where we're expecting some fairly downbeat numbers, 0.5% growth on the quarter, and just 5.2% year on year. So that may affect the Aussie a little bit on Monday. Heading forward, though, there's not an awful lot out of the States, so the capacity utilisation, industrial production, they shouldn't affect the markets a great deal, I don't think. Heading into Tuesday, the RBA minutes will be keenly watched for when the RBA are expecting to begin tapering, perhaps. Once again, there's not an awful lot from Europe, but the building permits and housing starts we get from the States, the API, and also the fortnightly GDT price index for Kiwi traders. That'll be worth watching. Then as we move through the week, Wednesday brings the Chinese PBOC interest rate setting. There is talk of an RRR rate reduction. We have to wait and see on that one. The UK CPI comes out on Wednesday, and then moving through the day, we've got the EU CPI coming out a little bit later. Again, not an awful lot from the Fed. There's various Fed speakers throughout the week. Looking into Thursday, again, it's as I say, it's a pretty thin week. Most of the concentration is going to be on the quarterly reporting season. There's not an awful lot to come. We've got the NAB business confidence out of Australia that might have a little bit of a movement on the Aussie, but we've got the jobless claims and the Philly coming out of the States, and that's about it. But then Friday, we actually do get a little bit of action, because we've got the flash PMIs coming out throughout the day, starting with Australia. Actually, I see Governor Lowe will be speaking early on Friday as well. So following that, then we've got the PMIs, as I say, and they'll go right through the day, ending up with those from the States late in the session. So that aside, there's not an awful lot going on this week. As I say, it's going to be calendar reporting season and basically central bank headlines, I think, that markets got to focus on. But overall, risk sentiment remains positive, so I like to be long the commodity currencies and like to be long the stock markets at the moment, and buying dips in oil. I think that seems to be the theme. Anyway, we'll leave it there for now, folks. Have a good one, and we'll talk to you next week. Cheers.